This video today we're going to talk about CRT, candle range theory. This is a model most people use and make millions out of it. So I'm gonna share this idea with you and make sure you have a pen and a paper to note down every important stuff I'm gonna spit out of my mouth. So I've shared some photos of what CRT is. It's a candle range theory. So we basically read candlestick and tell where the direction of the market or the price is going to move. So for a simple understanding what CRT is, we basically read about candlestick. It can be either bullish or bearish candlestick, and the candlestick bodies are gonna tell us, or the candlestick behaviors are gonna tell us what's gonna happen next on the market. Or is the market going to be bearish? Is the market going to reverse? Or is the market going to consolidate? That's what we use CRT for. So yeah, get ready and let's learn. So right over here we have a candlestick body, and I'm gonna draw a wick right over there so it can be a full body and wick candlestick right over there. So we're gonna use this as our bullish candlestick. So this is our bullish candlestick, and I said before, when you start to trade, the trend should be your friend, because CRT works well if you trade according to the trend of the price. Trend is your friend. That's what you started learning and understood when you started learning forex. So these are bullish candlestick, and CRT basically is how we're going to read the candlestick price and the candlestick closes. So in this candlestick we have a high and we have a low over here. This high and low, there is a basic understanding on how price move. If the candlestick body closes below, right over there, the body did close below, it basically shows continuation of the market. But if the body closes above and leaves the wick down below, a huge wick over there, it shows a reversal. And that's where CRT comes in, because every reversal over there, it's going to be a turtle soup, and the CRT is going to help us to identify the turtle soup and the trend, and we're going to get into trade and make millions and make our families happy. Yeah, so right over there, like I said before, if the body closes down or outside the previous candle, the market is showing a continuation. But if the body closes above the previous week and it leaves the wick downside here, well, that shows the market is reversing, and that's where CRT comes in. So CRT can be a two body candlestick or a 3-body candlestick. So this example over here is going to be a 3-body candlestick. So the first candlestick was it's going to be let me put this as a bearish. So this could be bullish and this could be the bearish one, because it's a bullish. Yeah, so the first candlestick is a bearish candlestick, the second candlestick is a bullish candlestick. The first candlestick was a huge one. It had a movement, went down, closed. Then the second candlestick was a doji candlestick. If you learned about candlestick when you started trading, it's a doji candlestick. We're gonna use the CRT candlestick. So this one over here, the candlestick opened. Since it was a bullish, I taught you guys about the open, high, and low close. So a bullish candlestick is gonna open and go low, then go high and closes. So this one did the open, low, high, close candlestick. Then it closed, leaving a wick, which was over here, which created a CRT over here. As easy as that, we are able to identify our CRT over here. So the next candlestick, it's gonna be a bullish candlestick over here. So basically CRT is how we use the candlestick to identify the next price movement. If the candlestick body closed below over here, we could not have had a CRT, but the candlestick body closed above, which closed above shows the reversal, and there the market reversed. So most of the traders do trade this third candlestick. If you waited for the the second candlestick to be created, then they trade the third candlestick, which was a bullish one, so they wait for the open low, then the market goes high and close above here. So you could put your entry here, your first TP, second TP, depending with the highs and lows of the current market, until the next candlestick over here. Then we have the second part of a CRT, which is a two trading candlestick one, this one over here. So the second one is more of a chart also, but it's also CRT over here. So the candlestick goes, let's say this one was a bearish one. The next candlestick, it's gonna come and sweep liquidity. The wick's gonna close above, right over there, and it's gonna push upwards and closes above to show a continuation, or it might close below. It's also a CRT which created the turtle soup. I also did a video about turtle soup, so it's gonna be easier for you to understand and fix them into your trading model. So I hope you have understood it. So I'm gonna use it as an example on today's price action for you to understand it. Okay, like I said before, if you want to start analysis, we are gonna use the daily bias to our analysis. So on the daily bias, what do you see on the 3-month time frame is that the market is bullish. On the monthly time frame, the market is still bullish, though we started a new month here, this over here. Let me remove this over here. So we started a new month over here, which is February. The previous month, what do you see about the previous month candlestick? You see the candlestick body closed above, it shows a continuation in a bullish formation. The only way to have a way in the market is for you to understand how the candlestick moves. Don't cram the markets, understand the markets, okay? Right over here, the weekly candlestick closed above. We have a new week, and the new week, as you can see, we were supposed to go bullish. The candlestick opened and went low. So we're gonna go to the weekly time frame and see what happened. On the weekly time frame, yeah, the previous week also closed above, the body above the previous candlestick wick closed above over here. So we expect for an open low high close. Yeah, so we go on the daily, which is today. We're gonna read about today's price action. So on today's price action, what do you see over here? The candlestick wick closed below. Some people do misinterpret this as a CRT because the wick closed below. The wick closed above, but the body is still bullish. It's a bullish body, and we have a bullish bias. So this one is more of a manipulation. So we have a huge fair value gap over here, which you're gonna use it as an advantage. Remember, I'm using the same concept I've taught you about the daily bias. If you went through the video, you'd understand everything, because I always give out everything for you guys to understand. Thank you. And yeah, we have a fair value gap there. So what we expect the market to do is come fill the fair value gap right over there. So from the beginning, what have we guys done as we analyze our charts? We've started with the daily bias. The structure was bullish. We also have seen the candlestick closure. It was a bullish, targeting the high. We have used the open high low close concept. The concepts I've been teaching you guys. Okay, so stick into the 4 hours. Right over there. Today's price action. No. Right over there. I think that's where the opening happened. The opening happens on 1800. I've also done a video about that. So there. So what do you see here? What we see here is our fair value gap, and for you to see it good, right over here, we have this low over here, which the market might come back and reverse. But we're gonna use the higher time frame to see what's gonna happen to the markets, because the fair value gap is huge. We might at least use the 50% discount level as we trade, because gold has a lot of manipulation over there. So this could be the discount level if I'm not wrong. So we expect the market to come, open, come to the low, then goes high, targeting the next high, which we're gonna have a turtle soup or maybe create a CRT on the 4-hour time frame. Hope you're focusing on what I'm talking about. Please focus, because this is your life changing. Yeah, so let's play. Let me put it to 1x speed. Play it right over there. The market opened, targeted the low. What do you see? Like I explained before, gold has a lot of manipulation. Manipulated this low, closed below, showed a continuous movement to the price low, targeted this low, of which was the fair value gap, and came back and closed above. As it came back and closed above, what do you notice about it? It's the CRT that I was talking about before we started our explanation right over here. So this candlestick was bearish, the second candlestick was bullish, which showed a reversal. And I said before, if you cannot find an entry on the lower part of it, you could use the open low high close of the next candlestick. Let's see how it plays. So what happened to the next candlestick? Used the same open low high. It was a bullish one. It opened, went to the low, went up and closed above, which targeted our high over here. So you could have entered here, targeted the high. But if you was looking for a turtle soup on the fair value gap, right over there, so we had this low which was swept over here. So you could have created a turtle soup, but this is for the advanced people who have already backtested their strategy and understand them. But I'm giving you an easier way for you to make money through trading. And that's how easy you could trade CRT with your discipline and make money out of it. The first candlestick, which is accumulation, manipulation, then distribution of the market. Like I said before, you understand the open low high close concept, which was on the daily time frame. Let me zoom it for you to see today's candlestick. It was a bullish one. It opened, went to the low for the manipulation, then distributed the high and happened to the closure. Thank you guys for watching, and I hope you understand CRT, and I hope you start understanding CRT, and I hope you start trading it, and I hope you start making money. If you have any question, feel free to ask, and adios muchachos.